Today is the 24th of April, and as you can see on the screen, we're not going to be looking at any data because there was no substantial data coming out today that I figured or saw. So I thought we'd mix it up today, make it a bit more interactive or engaging at least. And so we're going to be looking at how I looked at the markets this morning. So you can see gold, or let's start with GJ actually, to apologize. Start with GJ. We have a look. We're looking for buys, continue our main bias, which we were correct with. We got deep pullback buys down to filling that previous market open, which created a gap. A lot of the times you do see the gaps corrected, and then price continues in the direction it wants to go or is following, right? So unfortunately, that idea slipped on my head, and we'll talk about that now. And we went forward and went up all the way to 16. I mean, exactly our targets, right? 167,600. So should have been a good day, right? And then we got gold. We were just playing the bias of if we got safer buys above 1988,500, and mainly trying to play or even sells from 1988,500 if it failed to break, and playing the main bias of sells, but understanding that pivot players technically do have a lot of the narrative at the moment, so that is against these sales ideas. So it's a bit counterintuitive this plan this morning, and buys from 1981 were also valid. So as you can see, we got a lot of ranging, pullback, deep pullback to 1976, where we did get buys to continue to 1988,500. So we're going to have a look at this on the charts, and we're going to be using the charts on TradingView. I think it's going to be a bit better to understand what's going on. But before we do that, I'm just going to quickly show you the negative data. We had negative 1.2 today, which is obviously quite rough. Three losses and one break even. So not an ideal day. But we're going to go through and break down why and what happened. So if you look at here on this chart, we look at GGR first trade, and we can see we entered the first trade roughly. This is going to be roughly, right? 727 we entered at. That is correct. We entered roughly around this area with about 10 pip stop loss, and our target was 200, right? And the reason why this is wrong is because you can see a lot of consolidation up here where I'm circling. So consolidation between these two levels. And as mentioned previously before, the price most of the time is likely to correct that gap and then continue forward. And it's exactly what happened. The main bias was still buys. It still corrected itself, the gap, and the buy still got fulfilled, but it just needed a deeper pullback. So we were still in a bit of a pullback structure here. And we entered buys, very stupid, just wanting to get into the market. Monday mornings, very stupid loss. Don't think this should have been taken. And obviously, we want to move corrected. You could continue and grab some buys potentially with the double bottom here at 800, or continued going on further up with entries potentially off 167 flat if you're trading at that time. So unfortunately, poor trade, right? Poor trade. So next one we're going to be looking at is gold. And as you can see, I've drawn a little bit out for you already. So what happened was the same in the morning. We were looking at, right, if GJ is coming down and we failed that trade, our last option, if there is any, will be on gold. So as predicted from our start, we're looking at quick sells, right, to retest 76 at least. And we've got consolidation at 81, showing no signs of breaking. This is good for us. So once this consolidation broke with the sell stop I entered, stops were actually above this area here. So about 18 pips. And we were looking to continue all the way down to 76, about 2-to-1 trade. And unfortunately, we just ranged. We pushed down about 10 pips, I'd say, 10, 11 pips. Oh, sorry, 19 pips. Then pulled back, retested our entry, came back down again, another 17 pips, and failed to break. The issue I had, I closed at break even. The issue I had with this trade, and what everyone should learn from this is, if I'm entering like with a sell stop or aggressively, you need to manage that trade aggressively. So the management wasn't there. The management needs to be, once this candle started to retrace and go back up, we need to get out of the trade. If price is failing to make another lower low, what are the chances it's going to continue going up and create potentially a new higher high and a higher low? Very high. Because once we failed to have the momentum here, it was London Open, failed to break. If London Open fails to break, it's not going to happen, right? So playing that narrative and understanding and having that understanding, close roughly here. So you still close in profit, but poor trade management there today. Last two trades were on GJ. So after a poor morning, I labeled some stuff here just to make it a bit easier for us. So we're in a bullish trend market, right? We're creating high highs and high lows. That's how we know that. So on the 1 minute, we're looking at high highs, high lows. We're at 167,600. Initially, that was my goal for the day. So I asked myself, Why am I entering at the targets for the day? I understand it's going to be low volume and volatility. Why am I entering here? Great question. I couldn't tell you. So you can see once we broke above, I expected a retest of 500 to continue higher. Didn't get that. Understandable. We were expecting to see a lot of reaction at this area. We're not a lot of catalysts in the market at the moment to continue pushing price in directions. So silly trade again. Yes, we did get higher high and higher low, but we failed to create another higher high. Once we failed to do that, close the trade. In my opinion, this shouldn't even be in the trade, right? And going forward to this trade over here, if we have a look at this one, our last trade, we can see, so similar idea. We just got a deeper pullback, consolidation, break above, and once we broke above 500, I'm expecting to continue with this strong bullish candles. And as you can see, we actually rejected a 4-hour zone that we marked on our chart, and we took a loss from this. This should never be a loss. It should be at least a break even. Once again, poor trade management. So overall, very poor day in trade management terms. Just very poor entries, and overall, not a good day, right? So going into tomorrow, resetting the mindset, obviously, and understanding, take your time. There's low volume volatility in the markets. Don't rush any trades. There's no need to rush a trade. There's plenty of opportunities out there, right? To understand and, to understand why you went wrong is key, in my opinion, to improving, right? May sound obvious, but me going through these video journals and talking myself through why I entered and why I shouldn't have entered, or why I should have exited here, etc., is very important for not only my improvement, but you should be I should be encouraging you to do the same within your trading, so you can see your improvements. So overall, very poor day, very poor, but a lot of lessons, right? When it's poor days, it's perfect for lessons. So going forward into tomorrow, I'm looking forward to seeing what the market provides, but also implementing what I've learned today into tomorrow and prevent the mistakes I made today.